Well, thank you everyone for joining in and being a part of this today. Glad that you are here today. We're going to talk about really rethinking wealth management. My name is Josh Arrington. I am the Senior Business Development Manager here at Archetype Wealth, and really glad that you're here. It's great. I'm actually getting to do this from the office rather than my office at home, as we are slowly starting to return to normal. So it's sort of nice to be set up here instead of having kids running in and out. So hopefully we'll have none of that for you today. You may be experiencing some of that at your home as well, but we're really glad that you have joined us and that you're here today. Have you ever had one of those experiences in life where you expected one thing and got something totally different? You know, it's as simple as if you ever reach for a soda to grab a drink of soda and you expected it to be soda and it was unsweet tea, and there's sort of that just total blow off in your mind of, oh, this is so terrible. It actually makes it worse. If you've ever looked at my bio, or if you know me at all, some of you do, my background for years, I served as a pastor. And one of the things I learned in working with people is the gap between expectations and reality really affects how people experience fulfillment. If the expectations supersede reality, then you tend to have negative emotions. And if reality supersedes expectations, you tend to have negative emotions and negative responses. And the way you adjust those is either working on shifting reality or working on shifting expectations. And I want to talk today a little bit about this in terms of wealth management, because I think the expectations of what is wanted or viewed as you could get from a wealth manager is that bar has really been lowered over the years. And it's become a very low threshold that's really only defined by a couple of things. And is it possible that in wealth management, you're missing out on some opportunities and some things that you should be expecting to get from the person that you're entrusting with your life savings, your life, all of these things? What should you be able to expect from them? And so here at Archetype, our mission is really simple. It's to help families thrive across generations by connecting their money with their purpose. And that's where I would encourage you to start. Whoever you work with as a wealth manager, go look at their purpose statement and ask yourself, is this really what I want for the greater part of life, for the greater impact on my life? Some of them you'll run into are just to make as much money as possible, or to survive market volatility and stay ahead of the market. And those are great objectives. We have those. You'll see that in a minute. We want to steward investments really well. But we just believe that in working with clients, there is so much more that we can do. That it's not just about making money, but it's about helping families thrive across generations. We know for a fact that the majority of wealth that's passed on generation to generation is lost within 3 generations. Over 97% of wealth disappears within 3 generations. And there have been studies done that show us that the number one reason that happens is a breakdown in communication between the family. So does it really matter if you're making a ton of money and your investments are doing great, and you have in your mind that you're going to leave money for generations to come, but you're not being equipped in how to have those conversations so that your financial legacy lasts for generations? Wouldn't it be better to make maybe even less, hopefully make the same amount, but to have something else given to you that helps you to have those thriving family conversations? And then we want to help you connect your money with your purpose. What is your purpose? Why are you here? Is it just to make money? Okay, well, we want to help you connect your money with that. Is it that you want to leave a legacy for your children? You want your children to be taken care of. You want their college to be paid for. You want them to be in a place where they start off life maybe ahead of where you started off life. That's a great purpose, but how are you connecting those things together? Maybe your purpose is that you want to see the world changed in a specific area. Maybe you want to see fresh water wells drilled in Africa. Maybe you want to see homelessness curbed in your city. What are those purposes, and how do you effectively and efficiently connect your money with your purpose? It's beyond just making money. And so what we're going to do is just really talk about the things that money impacts a little bit. And then we're going to sort of walk through who we are and what we believe you should be able to expect from a wealth management firm. So the first thing is that money impacts a lot of different things. And we tend to call this our 4 quadrants. And it sort of makes up your financial identity. Money impacts your strategy for life, for paying your bills, for dealing with all those things. Money impacts your investments. How much you have impacts how much you invest, impacts your goals and your future. Money impacts your family. It's one of the top two stressors in any family relationship, in any marital relationship, is things around money. And then obviously money also impacts your legacy. So we call these our four quadrants, and we want to have a focus in each of these to help our clients to thrive across generations. And so just walking through those, the first one there you see on the top left is our strategy quadrant. And really we start there by asking the question, do you have a strategic plan in place to manage the complexity of your wealth? Now, the complexity of your wealth is different than the complexity of anyone else's wealth. No two families have a balance statement for their family that looks exactly the same. And so do you have a strategic plan? A recent study by Schwab showed us that less than 1 in 4 American adults have a written plan of any sort to deal with their finances. Even for people who are high net worth, people who have over $3 million in investable assets, less than half of them have a written plan. And when you don't have a written plan, the old Yogi Berra is, if you don't know where you're going, you'll probably end up someplace else. If you don't have that in place, if you don't have a strategic plan, then how are you going to get to where you want to be? And this carries across even people who work with financial advisors. I'm amazed by people who are literally CFPs who've never done a financial plan for a client. We believe that you should absolutely have a financial plan that gets you and your family and your advisors all on the same page. And then we believe that that plan is something that you should revisit on an annual basis so that you're constantly adjusting for the different things that life has thrown at you. So really when we dive in with clients in the strategy box, we want to help them create a holistic blueprint for life, something that goes beyond just the bank statements or the investment account statements. We want to go beyond just what's your risk tolerance and your asset allocation, but to really dive into designing your family's estate structure, your giving strategy, treating your finances like a balance sheet. Some of you I know that are on here are business owners and executives at companies. And in your business life, you have a lot of time and energy spent on your balance sheet. Personally, as your wealth grows, your personal finances become a balance sheet of their own that need to be focused on and need to be treated with the same kind of time and respect and consideration that you would in your business. And then how do we help you plan for wealth transfer, however that might look? And we want to drive the execution of the plan by having it done with your family involved and with other trusted advisors. What we're really looking for in the strategy box, and this is the first question I would sort of leave you with, is do you have alignment with all of the different advisors you use? And do you have alignment with all the members of your family around your finances? And based on that alignment, do you have confidence, not trust in the ability alone of the advisors you're working with and people you're working with to get you where you want to go, but also confidence that if there are adjustments that need to be made, you trust that they're looking out for your best interest, that they are fully on your team. And we'll talk about what that means a little bit more in a few minutes. Our next quadrant that we talk about is investments. And this is really, are your investment decisions crafted to maximize your family strategy? If you're investing before you have a strategy, good luck. We get asked the question all the time, especially in recent downturns. I get the question, hey, what's a good stock? I got it a lot just a few weeks ago when people were getting their checks from the CARES Act. Hey, I just got $3,000. What's a good stock for me to buy? Well, there's a lot of them out there, but what's your situation? You can't make investment decisions unless I know what your family strategy is. What are you going for? Are the investments being measured based on your strategy? Are your investments being managed based on your strategy? Is the investment portfolio that you're in driven by a disciplined approach that's based on pertinent data? Or is it driven by emotion or projection based on thoughts and gut feelings? You'd be surprised how much of that actually goes on. I was talking with someone recently who lost a substantial amount of money in the downturn that happened. And they were not a client of ours, and we were just in the early discussions when the downturn happened. They lost about a quarter of what they had, and then their advisor wasn't talking to them. And when they finally did talk to them, it was an email message to tell them that they were selling out of everything and moving to cash within 200 points at the bottom of the market. The reason was they didn't really have a disciplined strategy. So is there a disciplined strategy in place that's driving your investments, and a disciplined strategy that you understand? One of our principles here is keep it simple, Stuart. If you don't understand what's going on in your investment portfolio, there's probably a problem with that. Doesn't mean that you understand it well enough that maybe you feel like you should do it all on your own, but you should have an understanding of what's happening there. And for us, that really comes through what we call our 3 dials. Our 3 dials basically are constantly looking at the markets, and it's not an algorithm, but it is a lot of analytics. And we are judging our portfolio allocations, both across the portfolios that we manage, but also the individual tailored portfolios to clients based on our 3 dials. And so those 3 dials that we look at are, we're looking constantly at market momentum. We're looking at a 200-day lag to see, is the market bullish? Is it bearish? Which direction is it moving? And based on that, our dial is either on, off, or neutral. And that will have an effect on the allocation of equities to non-equity products in every one of our portfolios. The second thing that we look at is we want to look at what are the market fundamentals, what's happening with unemployment, what's happening with GDP, what are all those pieces, and how are they affecting things? And again, that dial can fluctuate in 3 different positions, and it will affect what's happening in the portfolios. And then the last one we want to look at is market valuation. What is the market doing? Where do we think it is? And so if you go back to the beginning of the year and you look at market valuation, for us, even before COVID, we thought the market was overvalued. The ratios all told us that the market was overbought. And so we had already trimmed back on equity some because of what that analytic was telling us. Now, when everything went south, we got the question from a lot of people, hey, surely the market's at a good value right now. Problem with that is that's not necessarily true. Yes, the price of individual stocks fell, but earnings also plummeted, and that's how we arrive at valuation. And so we're looking at the data as it comes in and analyzing the data in 3 specific categories, and then we exercise a disciplined approach to that. And that drives our decisions more than anything. And then you need to have a diversified portfolio that helps you to reach your objectives. If everything you have in your portfolio is just in one company or one area, you are putting literally all your eggs in one basket. And so we work with clients to help them diversify their portfolio, but diversify it where it really fits what their strategy that was developed is. So for us, we have an investment council. You'll hear more about that in a minute. That is experience, over 50 years of experience in the markets, and they meet and they make the determinations on these areas. And the question I would have for you here, again, is in working with a wealth manager, would you say that you have a very principled, data-driven, disciplined philosophy? And would you say that it's principled simplicity? That it's a philosophy that you can explain and have confidence in understanding how your money is being managed, whether you're the one running the analytics or not. We take care of that for our clients, but we want them to understand the principles behind what we do. Our third quadrant is the quadrant of family. Now, this is where we really begin to see the separation to, is there more that you could expect from a wealth management fund? And so for us, it's the question, is your wealth a source of blessing or a source of stress for you and your family? Let me just tell you, in working with clients of all different sizes, it doesn't matter how much money is in your bank account. It doesn't remove stress. It just changes what the stress is. Stress and blessing can both be tied to your finances, whether you're making very little or you're making a ton of money. And so we want to come along beside families and begin to ask those questions. Is your wealth blessing you, or is your wealth stressing you? And how we want it to be in that blessing category. So how can we help it move there? This is where we dive into all kinds of things to help improve that communication we mentioned earlier between family members. It's the reason that we go in and we don't just talk with the generation that has money. We're talking with multiple generations, sometimes 2 generations, sometimes 3 generations. We produce curriculum and things during the town turn for people to do with their kids while they're doing at-home education. We want to help increase the thriving of your family. And so we give multi-generational advice. We want your family to define what is your mission as a family? What is your vision as a family? What are your values as a family? We want to know how we can help empower your marital and your family harmony around this issue of wealth. We want you to be on the same page. And then we want to equip all the generations to communicate effectively around your finances so that when the money is transferred someday, there's great communication on not what the transaction is going to be, but what the purpose is. And so that's the question that sort of flows out of that. And working with your wealth management, are they helping you as a family to maximize your purpose? And I would even add to that, are they helping you to maximize your communication and understanding of being on the same page? It's amazing when you have those conversations, the joy that it brings to your family, the peace that it brings to your family. And probably one of the beautiful things we get to see is the healing it brings to your family. Sometimes it's just as simple as not wanting to do different things with money, but learning to speak the same language about money. So these are all areas that we're providing tools to our clients in to try and take them to a place where they're not just satisfied with their account balance, but they're satisfied with what that account balance means in all areas of their life, because it's tied into something beyond just success, but tied into the things that are the parameters for them to have significance. And then our last quadrant is legacy. What legacy are you building today that will impact the generations that follow you? Those generations can be your children. They can be the areas of purpose that you have in life that are generations of giving outside of your family. But how are you building that legacy? And way too often, when we think about legacy, we think about what happens after we die. And so what we want to do with our clients and with people is come along and go, your legacy doesn't start when your tombstone gets etched. Your legacy starts today. How do you begin to use the resources that you have to build your legacy? If you want your legacy to be great with your kids, but you're spending all your time in your office making a bunch of money and doing nothing with them now, how does that affect your legacy as a father, as a mother, as an uncle, as an aunt, as a grandparent? Start building your legacy today. And so here we're going to dive into estate planning and structuring your estates to be a blessing. We want you to have purposeful succession in what's happening, but we also want to maximize your strategic giving during life and even set a plan in place to continue giving through the generations when life has passed. And that's one of the sad truths is we all get one shot at this. And we all will have that day that we're no longer here. How do we make the most of it? And we want to come along then and advise people, especially business owners and business executives, on the succession plans that they have to promote their personal, their financial, and their relational fulfillment. So the question here would be, is the person you're working with on wealth management helping you to extend your impact, your purpose that we talked about when we were talking about family? Are they helping you to extend your impact in meaningful ways that include your finances and the structures of your finances, but in the way that most helps you have that impact that you're wanting to have? And if you're getting those things, then you're beginning to experience more that can happen in wealth management. I wanted to just share one example because we, as we work with clients, we tend to dive in, and what we find is a lot of times there are ways that this can be done that haven't been thought about. You know, for a long time, what's happened in the world of legacy especially is that we just have been raised that we make as much money as possible and we pass it on to our kids. And so actually talking with a lawyer earlier this week, an estate lawyer, the statement that was made was what they've been taught to do forever is when there's going to be, for example, a transition of a company, is to devalue the company on paper to lower taxes and then to push the company down through the generations. And yet sometimes that's not what's best. So a lot of times what we do is we want to raise the value because we're going to give away parts of the company to get the tax benefit. But the purpose is going to be fulfilled and having it used for philanthropy while you're alive, not just passing out to your kids. So I wanted to show you just a brief example, and this is comes from working with one of the donor advised funds that we work with called National Christian Foundation. And basically that if your purpose is to have impact that might be nonprofit and philanthropic in giving, this sort of lays that out. So on the left side there, you have someone, and we're just going to assume that they're in the 37% tax rate, and they're giving 10%, or if you're a person of religion and faith, you hear that talked about a lot of times as being a tithe. They're giving 10% every year to nonprofit things. And so their tax then gets lowered a little bit to about 33%, and their take home for lifestyle is about 57%. But let's say they start thinking about purpose and meaning, and they decide they're going to increase their giving. And so they start giving out of their adjusted gross income 50%. It's a huge number. Well, their taxes obviously lower, and it lowers by 12%, 19% now, and you've lowered that significantly. But at the same time, you've lowered your lifestyle number to about 31%. So as you're giving more, your taxes went down, but what you're keeping for yourself goes down as well. Well, sometimes we can look at things and we can explore them, and we can begin to say there are other ways to go about doing this to give more. So in the example you see on the right, this would be someone who had either real estate or mineral interest, or they own stock in a private company. And so rather than giving cash out of their AGI, they could give a portion of ownership in one of those illiquid gifts through a donor advised fund. And now it begins to spin off money within their donor advised fund for them to use for giving. So as you see, the 30% that's there of their AGI given for taxable purposes, and they increased their giving. Yes, they doubled it from where we were on the left, but now they're giving that 50%. They're giving 50% of their value to the things they care about. And the taxes, they get reduced still from 33 to 19%. And what you see actually on the right-hand side is that because you structure a gift like that, what you take home actually increases by 4%. The reason is, crazy as it sounds, as much as most of us don't like the IRS, the tax code in the United States is actually incredibly kind to people who choose to be generous. And so this is just one example. There are many different examples, but it's not one size fits all. And I just really want to highlight that for you, that your situation is unique. One of the questions that I would ask any wealth advisor is how are you, what you're doing going to be tailored to who I am? From the Stanford Encyclopedia of Philosophy, has this thing called the identity of indiscernibles. And it basically says that it's typically understood that no two objects have exactly the same properties. If you're married, you might be nodding your head right now, especially after having been stuck in COVID for a while. Yes, no two things are the same, but no two financial situations have exactly the same properties either. So how much is what's being done for you, turnkey, everybody gets this kind of situation, how much of it is truly tailored, customized, consultative, not only in the moment that you begin, but over time as things change in your life, they're consulting with you and changing things with you as well. We believe that that's what wealth management absolutely should look like. And then there's some other things that we think are important as well in distinguishing wealth management from what you might think of initially. The first is to know who is on your team. There's an old African proverb that says, if you want to go fast, go alone. If you want to go far, go together. And so one of our principles here is that life is a team sport. And when we talk about that, we mean it both internally and externally. We think our clients get more from working with a team of individuals than just one individual. We think that our clients get more when all the people that impact their finances get on the same page, whether they're all at the same company or not. And so out of that, we internally have split the way that we work to the advantage of our clients. In a typical setting, a lot of times someone who's a financial advisor, and I started out at one of the big firms years ago. When you're in one of those situations, you do your own sales, your own business development, you do your own client care and experience and paperwork. You do your own client advice when issues come up for clients. You're executing trades. You're making all the decisions for how the investments are going to be done. And you're sort of expected to be this jack of all trades. And so what we've done is change that a little bit. We believe that just as your situations are unique, just as your purposes are unique, so too are the people that are on your team. They should be unique and have, as Liam Neeson says in some of his movies, a unique set of skills. And so here, we put your interest and your plan at the center of everything. And then we build a team that works with you. So on one hand, you might have a person from business development who's helping you get things started, who's maybe the face of the organization that you first interact with. But then as you move forward in the process with us, you're going to be given someone who's going to take over and do client advice, and that's all they do. And they're going to be your client advisor, to be clear. They're not a help desk. It's not a situation like that. Their job is to journey with you over an extended period of time and years to make sure that you're getting everything you need. And at the same time, your business development person is still being relational with you and helping you as well. And then you have a client experience person. And the client experience person is going to be the person when you need a check processed or you need something done that you can contact. And then your investments are going to be managed by our investment counsel. They're the ones who are going to meet with you, talk with you, or look over things and make the decisions. And we believe that this team approach gives a much higher degree of tailored and customized care to the people who are our clients. But we believe the team approach should extend beyond our walls as well. And that is, you have a team of people who are taking care of all the complexities of your finances. You have a financial advisor or a wealth manager. You will have, if you don't have, a lawyer who's handling your business transactions, sale of a company, your estate planning, all of those things. You probably have a CPA or an accountant. And so often what happens in these areas is that there may be referrals, but there's never a commonality. So our approach is we want to draw in with your lawyer. We want to draw in with your CPA. And we want to make sure that before any of us are doing anything, that plan that we started with, that we're all acting in your best interest, that we're not doing things that are in conflict with one another. And so we love to position and sort of play quarterback for your team. Trust me, the more complex your situation is, you may have several other people who are involved in your team. And then you may even have situations that arise that you don't know how to deal with. You don't know who needs to be the person. And so we believe that we've established a nationwide network of experts in all of these different areas. And we believe that if we don't have the answer, we will find you the answer. We will find you the best person. And just this week, we were dealing with a situation for a client who's planning out their estate planning and wanting to give away a portion of their company. And in the process, we could not find a lawyer anywhere in the city of Houston who could navigate and was familiar with what needed to be navigated for this particular client. And we just got on the phone and we reached out to our network and started digging. And within a couple of hours, we had found the person in the nation who's sort of a preeminent expert in this area. We'd hooked them up and we'd signed paperwork and we're moving forward. So who's on your team internally matters, but also who is it that's on your team outside. And then the last thing I'm going to leave you with when it comes to really looking at wealth management, it may be the question that's, I don't know if it's the most important, but it certainly should be the starting place. The first question you should ask any wealth manager or financial advisor is the question, are you truly a fiduciary? And you'd be surprised because I think most of us believe that they are. Now, if you're not familiar with the term fiduciary, basically a fiduciary is someone that is obligated in a relationship with another person to act entirely on the other party's behalf and best interests. And it's considered the standard of highest care. And so we, being investment advisors, and the capacity and the way that we're licensed and the way that we work, we are fiduciaries. We are obligated to our clients to always act in their best interest. We have to work to not have conflicts of interest. If there ever are potential conflicts of interest, we disclose those. And that may sound like, well, of course you do. But the majority of people who carry the title of financial advisor probably aren't true fiduciaries. In fact, if you look at your larger firms, by definition, they're actually an agent of that larger firm. And their standard is not to be a fiduciary and operate in your best interest. Their standard is that they can't do anything that is non-suitable for their clients. Now, that's a good thing, and it's a noble thing to not do things that are non-suitable for your clients. But the breadth of what fits into something that's non-suitable is significantly wider than what's in your best interest. And so whoever you're using, whoever you choose to use, let me just encourage you to make sure that they have a legal standard, an ethical standard, a moral standard to always operate in your best interest. I breezed through a lot of different things here. And so what I want to do is take a moment and just open it up for questions. So if you have a question, what I would love to do is just try and answer what that might be. And we've got one in already. So we have a question on what are some best practices for reviewing your financial plan over the year to make sure that you're on course? Yes, absolutely. So what we would say are some of the best practices are make sure that you schedule having those reviews before you actually need those reviews. Sometimes we'll run into people who'll say, well, nothing's really changed. We did a financial plan a year ago or 2 years ago or 3 years ago. Everything's the same. Well, inevitably, when we start asking questions, what we find out is nothing's the same. There are so many components that go into helping you go from where you are to where you want to be. And those components shift regularly. Your job changes, your salary changes, your 401k plan changes. A kid leaves home, a kid comes back home. There are so many different factors. And so what we say is make sure that you have at least an annual review scheduled, not to just look over your investments, but to also be sure that they're looking over your financial plan to guide you in the best possible way. So hope that answered the question. Leave it here again down there on the Q&A part. If you want to click on that and ask a question, we'd love to answer anything that you might have there. Okay, here's one. How long does it take to go through this process? That's a really good question. We don't put a time frame on it. And the reason we don't put a time frame on it is that we believe it's our job to journey with our clients over time, over a significant period of time. And we believe that as we age and as things change, the complexities grow and get deeper and deeper and deeper. And so we sort of say that we are constantly drilling down. And we use that phrase because we're cycling through the 4 quadrants. And every time we go through them, we tend to go deeper. There tends to be deeper things that come out. And so this is the initial stages. For us, a financial plan is the starting point. And then we begin to get the investments and things in place. But you're going to find that you're going to go deeper and deeper and deeper over the years. And so we just want to be that trusted partner for our people as we work with them. All right, got another one coming through here. What is most often overlooked when forming a financial plan if not done annually? Wow, what is most often overlooked? One I run into a lot is non-cash assets. And that comes through in a number of different ways. In fact, the old way of doing things a lot of times was you would talk with someone and they would say, what are your investable assets? And get that number. And then they'd say, okay, what's your time horizon to get to where you want to be? And you get that number. And then they would say, okay, what's your risk tolerance? And those were sort of the 3 pieces that were used. But the truth is, for most Americans, the real sum of your net worth is not in cash for the most part. And so it could be in real estate. It could be in royalty ownership. It could be in ownership of a company. There are so many other places where our net worth typically is. And quite often that's overlooked. And when it's overlooked and you operate your investments solely on a cash available standpoint, there are some things that can happen that aren't necessary. Number one, you can take on more risk than you need to be taking on. If you have net worth that's tied up in assets that will eventually have a moment of liquidation, and those aren't considered, then you may feel compelled to take on more risk because you're only looking at the cash flow. The other thing that can happen there is if you're saving, you might stress your current lifestyle by choosing to save more than you need to be because you're only looking at the cash numbers. And of course, because it's an important one to us too, we would also say that a tragic one that could happen is that you decrease your ability to be generous and live into your purpose because you're not taking into account. So I would say it's definitely the liquid net worth items that are on someone's balance sheet. So I hope that helps answer that question there for you as well. Well, those are the questions I've had sent in here so far. I want to thank everybody for coming in. I want to honor everyone's time for certain. If you have other questions, please don't hesitate to reach out. We would love to help you. If you just want to talk about your situation and how it applies, I would sit down with you or have someone from my team sit down with you. We'd love to do just a 20-minute informal get to know you and sort of a 20-minute free consultation to see what are some of the things you might be facing. But whether you go with us or you go with someone else, expect more. Raise the expectations. And as you raise the expectations, hopefully reality not only meets those, but surpasses those. And as it does, you'll find blessing and joy and contentment and fulfillment and happiness around your wealth. And I guarantee you, by personal experience and by anecdotal experience, when that area of your life is no longer a source of stress, but a source of blessing, all the other areas of life tend to look a little brighter as well. If you have other things you want information on, charitable giving, financial markets, any of the things you see listed there, we'd love to talk with you. You see my contact info there. You can feel free to drop me an email or give me a call. And then I just want to close with letting you know that not meant to offend anyone by any stretch of the imagination. If you're not a person of faith or wherever you might be in that, but we know that these are tough times right now that are going on. We know that a lot of families have been impacted in all kinds of ways, from the tragedy of having loved ones lost to really their finances being blown up and impacted. And if you need something, if you need someone just to pray with you, if you need someone to encourage you, we would love to be there for you in that capacity as well. And so I just want to make that offer to you and know that we care very much about the people we get to work with and want to journey with them for life. So I hope you have an incredible day. And again, if you have any questions, feel free to reach out. God bless. Talk to you soon.